What's going on? Sean here. Welcome to another video. In today's video, we're going to be talking about the things that lenders look at to help you get qualified for a mortgage.
Nerf this!
If you're finding my channel for the first time, please make sure to smash that subscribe button and turn on post notifications because I do release videos every Monday to get your week going and every Friday to get your weekend started. But I also release bonus videos at random and you don't want to miss a thing. With that out of the way, let's get into it. So let me start off this video by saying I'm only speaking from my personal experience when I got qualified for my very first mortgage. I did an FHA, which is basically a low money down mortgage in the state of Rhode Island where I bought my first investment property. They actually had a program where I could put zero down, which I know is not available everywhere. Typically, they ask for 3.5% down on an FHA loan. So here are some of the things that my lender looked for and asked for when getting me qualified. So number one was income. They wanted to make sure and verify how much money I made so they could make sure that I could afford the amount of house that I was looking to buy. Two was my credit score. They wanted to check and see, my credit history, see if I was late on payments or if I had anything in collections, which is I guess a 2A. They do look into your collection history, and me personally, I had two things in collections from 12 years ago, some sort of urgent care medical visit that I had never paid or something. So I had to take care of one. I could only have one thing in collection. I took care of both of them. But with that being said, if you have anything in collections, you want to make sure you get those off your credit report or settle them or do whatever you got to do. Side note on that one, once I got rid of those collections, my credit score jumped up. And not that it was terrible before, but it went from good to great. So maybe that's something you can do if you're just beginning to look for a house or look for an investment property. So number three, they wanted to see how much debt I had. So basically the ratio they look for is income to debt. Now I don't know the exact ratio that they do look for. However, they want to see that you have a lot more income than you do debt. Now this may be a little bit more difficult to those who have student loans. And one thing that I did when I got out of school is I basically took every single paycheck that I had, or majority of the paycheck, and dumped it into my student loans. I literally paid them off as quick as I can. I basically paid for my necessities, rent, food, and then the rest went into student loans. And then once I got rid of those student loans, what I did was just dump the money that I was paying towards the student loans into my savings account and saving up money that way. So something that they'll definitely look for is to see how much income you have relative to how much debt that you have. So the number four thing they're going to be looking for is how much cash do you actually have in the bank. They want to see how much money that you have for a down payment. Now if you don't have a lot of money in the bank for a down payment, like let's say you don't have that 3.5% or you don't have that 10 or 20% for a conventional mortgage, they may ask for a letter of explanation of why you didn't save up that money before applying to get a mortgage. And I had to write one because even though I had the money for a down payment, I wanted to save the money and keep it in my account for a rainy day or to buy another investment property. So I basically had to write a letter of explanation on why I wanted to utilize the zero down as opposed to putting the 10-20 I had down for a down payment. So something you may be required to do, especially if you don't have enough money for a down payment, is to write a letter of explanation of why you don't have that money. Another thing that they look for in regards to the amount of money that you have in the bank, so let's say you did have enough for that 3.5 or that 10, 20, 30, whatever it is, they're also going to be looking, especially if you buy an investment property, if you have cash reserves, which basically means, let's just say if your investment property flopped, if you didn't get tenants, something happened, you have at least 3 months worth of mortgage in the bank to cover yourself for those 3 months. So basically, let's say you had the 10% down plus 3 mortgage payments in the bank. So something that they definitely look for is if you do have the cash reserves. So those were the biggest things that my lender looked for when I was applying for a mortgage. So I hope this helps you. I hope that gives you a little idea of what lenders may be looking for. Again, this is specific to my situation. However, I think it's pretty streamlined, but then again, I'm not a lender. So hope you got something out of this. I hope that you go do the things that I suggested in the video. I will put them all right here. And I hope that you go buy that first investment property. I will do more real estate related videos on this channel because a lot of you seem to be liking them and recommending them and asking for them. So I do want to cater to you. So thank you so much. Again, my name is Sean. In each and every video, I do try to make you the best version of you. Thanks so much for watching. Signing off.